All right. Hello, everybody. Just want to do a quick little technical analysis lesson here. Most so called experts or pundits, in my opinion, don't know what the hell they're talking about when it comes to technical analysis, or a lot of things as well. But we're just going to stick with technical analysis. And I just want to do a really quick lesson to just teach you something. In my opinion, in my not so humble opinion, because I've been doing this a long time, I was a head of trading at various hedge funds and money managers. I've worked with some of the greatest traders ever. I know what goes on in the institutional trading world, and institutional traders do not think about stupid things like, oh, Elliott wave, oh, Gann vary, oh, Fibonacci, oh, harmonic charts. No, we don't think about that stuff. That is science fiction. If we want science fiction, guess what we're going to do? Throw on some X Files, from the '90s, which are great. The first couple seasons were great, but then it got kind of dumb when Scully started to like have the baby and get in touch with God and all this stuff. But the first couple seasons are good. Or I'd watch The Twilight Zone, or I would watch Twilight Zone, X Files, Star Trek, original Star Trek. But anyway, in the real world of trading, people think about things like what are important price levels, what's the momentum, what's the psychology. So, what I want to talk about now is how the I don't want to say the concept, but the characteristic or I guess the reality is a good way to say it. The reality of seller's remorse can convert levels that were resistance into support. And when markets are going up, seller's remorse is very common. All right. Pretty obvious. You don't need to be Spock to understand that. People sell and the market goes higher and they regret selling. All right. So what happens? People sell their shares. They market goes higher. They tell themselves, "Oh man, I shouldn't have sold. I'm going to buy my shares back. I made a mistake, but I'm only going to buy my shares back if I can get them for the same price I sold them at." So when markets are going up, we have seller's remorse. When the seller's remorse runs out or doesn't happen anymore, that's a characteristic of a market top. So what we're going to do here is we're going to look at the technology sector ETF. XLK is the symbol. This tracks the technology sector of the S&P 500. Now, you don't need to be a chart guru or a former hedge fund trader or someone who was in the institutional trading world for longer than they care to admit, like I was, to see this. Check this out. Look down here. All right. Notice how the level that was resistance here in October of 22, almost a year ago, became support here. Why does this happen? It almost seems, I don't want to use the term miraculous because I save that for religion, but it only seems like amazing, right? How is it that a level that was clear resistance can become clear support? Well, it happens because of seller's remorse. There are people who sold here and they thought they were the kings and they thought trading was easy and the market went down. But then guess what? It blasts up through their levels. And a lot of the people that sold there tell themselves, I made a mistake. I want to buy my shares back, but I'm only going to buy my shares back if I can get them for the same place. Sorry, for the same price I sold them at. If you have enough remorseful sellers placing buy orders at the level that was resistance, resistance can convert into support. Resistance in October of 22 became support in November and December. Resistance in November of 22 became support in February of 23. Resistance in February of 23 became support in April of 23. Resistance in May of 23 became support in June. All right. Resistance in June became support, but now that support has broken. Markets don't go straight up, they go up in like a staircase. You got this like trading ranges, right? You have a trading range, then you get the next trading range, which is higher. And what was resistance in the one range becomes support in the other range. When this, I guess, phenomena, I'm going to go with that word. When the phenomena, you can almost even see it here, right? Resistance here became support. When this phenomena of resistance becoming support ends, it tells us that the seller's remorse is not happening anymore. And this is a characteristic of a market top. So resistance became support in the tech sector, but the resistance failed, or I'm sorry, it converted into support, but the support has failed. It's a sign that the market's going lower. Remember, everybody, don't think about all this weird stuff, right? Like tech, whatever, you know, Fibonacci, blah, blah, blah. Understanding technical analysis is understanding what are the important price levels, what is the psychology, which encompasses buyer's remorse, seller's remorse, what are the trends, so forth and so on. This is what real traders in the real institutional world pay attention to. All right. So that's it. Hopefully, this will teach you a lesson. Now, actually, before I go, you might be saying, well, how the hell can I use this to my advantage? Well, hey, the market starts to go lower. You're thinking, oh man, I want to buy something. Where should I buy it? Oh, do I just want to guess? Oh, such and such a stock, XYZ or ABC or whatever it is that you're looking at, is going lower and it's getting close to a price level that had been resistance. Well, there's a good chance, not a guarantee, but there's a good chance that if it's going lower and it gets to a level that had been resistance, it will find support there. So you don't just need to blindly enter the market and just be like, I don't know what to do. I'm just going to guess. What you should do is let the market tell you what to do. The market speaks to you, and it speaks to you by how it acts at these important price levels. So if you know where the price levels are that are important, remember, some price levels are more important than others. If you know where these price levels are, it helps you because you can set your targets, you know where to buy and sell. Knowing where the important price levels are, it's like a map. If you went into a town you were never in before and you didn't have GPS and you didn't have a map, you wouldn't know what to do. If you had a map, and I'm going to, kind of age myself here because I don't really like GPS, but I do like looking at maps. As a matter of fact, I have a collection of old maps. But if you know where these maps are, if you know where these levels are, it's like having a roadmap. So the best traders let the market tell them what to do. The best traders focus on price levels, momentum, psychology, and trends. And that's it. Thank you, everybody, so much. I hope you have a good weekend, and I will see you soon.